This week, earnings kicks into full gear with all the majors reporting. Here's what you need to know before the bell. This week, we're going to hear from all the big stocks, Microsoft, Meta, Google, a whole variety of others. This is going to be a very important week for the earnings outlook and for the markets, particularly on how the rest of this year looks. Again, all these companies are going to beat estimates because we've lowered those values so much. We're going to have a high beat rate of those numbers. The question is going to be, what do they say about the rest of this year? Are they seeing the economic softening begin to bottom, or is it looking to be worse? That's going to be the big question that we'll be parsing through out of these earnings statements. But markets now are getting fairly tired. We talked about last week that the markets were beginning to become a little bit exhausted after this big run. Stepping back, we'll talk about back in February, we wrote an article saying, hey, the correction had likely started. In March, we pinned the article saying, hey, we're going to get to 4,200 on the index on that rally. Well, we got to 4,168, close, no cigar. But markets now really kind of stuck here over the last week or so as we've been really kind of just parsing through some of this economic and earnings data. As such, the MACD buy signal is very close to now registering a sell signal, which is why we removed our index trading positions that we had added previously on Friday. This is now setting the markets up for a bit of a pullback here, but again, whatever correction that we get in the markets over the next few weeks is likely to be fairly mild because you have a tremendous amount of support running between the 200-day, the 100-day, the 50, and the 20-day moving averages all clustered up right here below where markets are currently trading. So downside risk right now is about 4,000 on the index. That's about a 168-point drop from the high. And again, we should find some support in here. Importantly, just keep kind of watching this rising trend line because that's also giving support to the markets as well. Again, nothing to worry about here momentarily. Market breadth has been getting a little bit weak, and that suggests we're going to get this pullback in the markets. Also, bullish expectations have gotten a little bit high here. So again, this kind of overbought condition needs to get worked off. But any bit of pullback here that finds a level of support and holds will be another good opportunity to add some exposure. Again, just keep a watch on our sell signals. When that converts back to a buy signal, that'll be when we want to start looking to add exposure back to portfolios. Again, this is going to be a year where there's going to be a lot more trading and sideways kind of volatility in the market. I'm your host, Lance Roberts, and that's what you need to know before the bell.